This conference will now be recorded.
So we just wanted to go over the Paycheck Protection Program loan forgiveness application that the SBA came out with about a week and a half ago now. And Kim mentioned in the beginning, and not everyone was here to hear that, they are just made more changes last Friday. So it's continually changing and developing, and we're continually learning more about it. But we just wanted to go over things as they come out to keep you guys just as educated as possible. And I've gone through and read this, and so has Kim, and we just wanted to point out some of the key things that we found that shed light on the whole forgiveness process and what the SBA is expecting and allowing. And so this is the first thing, is the alternative payroll covered period. And for bi-weekly payroll, they're allowing the payroll to start not just on the first day that the loan was given, but on the first paycheck within the loan period. And there's not a lot of detail in this and what exactly that means, if that makes the whole 8-week period for payroll as well as non-payroll costs start on that first paycheck or just the paychecks. But it does give us a little bit more wiggle room as far as the forgiveness date and what's included in it for payroll. So I just wanted to point that out. Kim, I don't know if you have any other comments about that section of the application.
So, so we subscribe to webinars by highly learned folks that are just studying this right now. They're spending night and day studying the law, interpreting the law, because law and tax law, regular law, criminal law is always up for interpretation. Mm-hmm. We're subscribing to specific spreadsheets concerning the interpretation of this that will stand up to your bank, to your lender. I think pay period coverage. So simply, it's when that payroll incurred. If you got your loan on May 1st, you cut your paycheck on the 15th. Your payroll incurred on May 1st. Am I kind of saying it that way? Here's what I want to say to my folks, to y'all that are here now in the future. You guys don't have to worry about this. We will be doing this for you. We're going to have, like we do with how much payroll you should take, not take, what kind of home office expenses, your entity type. Same with this. What's going to maximize your forgiveness? And those are the balls we're going to juggle. Nia, I want to say this before. I just got off a webinar before we came on here, and in the House of Representatives, or in the House, there's a bill that's going to be passed either today or tomorrow that's supposed to go through to extend the forgiveness period for 24 months. Understandably so. Southern Premier, although she's kept her people, but let's say, she couldn't and had to lay off 20 folks. She would have till December to replace those 24 folks. Those are the people she laid off. That's what there's. So there's again, we're going to, what we say today may not be tomorrow. Last Friday, there was a change. Thank gosh I didn't see it. I was on a holiday vacation. The Friday before, there were changes to the forgiveness. So it seems to be like on Fridays they do that. But then again, so we have to be Gumbies. I don't know if any of y'all remember that toy Gumby or the cartoon. Nia, do you know about Gumby? Oh dear. Yeah. Oh gee, Shamish. I'll have to buy one and show it to you if they still have them. Gumby was this toy. It was really flexible. So we're all going to have to be that person. But just know that not every waking hour, but almost every waking hour, like we're forsaking a lot of other things that we normally do this time of year because we're doing this, because we have to. And we've got you covered. We've got you covered. Okay.
Yeah, and with Kim saying we've got you covered, that reminded me, I think at least like half of you guys have payroll services through us, and which is great because it allows us to monitor and figure that all out for you a lot more easily. and, create reports and change the dates of those reports. If, okay, this was the date that your loan was given versus this is the date that you took the first payroll after the loan was distributed, and what kind of changes that creates for your loan and its forgiveness. And we can work with all that stuff.
And I know Suzanne has 46 employees and she has payroll leasing, which is different. So she's not even depending on her payroll company to give her those reports. She's got her ammo loaded and extensive spreadsheets, which is going to make it easier to justify, or if we have to pivot, okay. Thanks, Nia. Thanks
for constantly having to do with the changes is pivot. Wait, no, change, pivot. But we're there to do that for you guys and with you guys. And so this next section just kind of covers, what we knew to be the case with non-payroll expenses, mortgage interest, rent, utilities. And I'll just kind of go down here for a minute because it does list utilities and what that entails, which before this came out, we didn't really know what the SBA was going to consider a utility. And it is electricity, gas, water, transportation, and that's a huge one.
Can you
access?
I'm sorry, Nia. Can you chime Suzanne in a second? And Suzanne?
Yes, ma'am.
We're going to really hone in on this transportation thing.
Okay.
Because that's a big unknown to you because the amount of money you spend on transportation. Now, what I want to say to y'all is that I have a parasail client, right? So he's got his big jumbo boats and he takes people up over John's Pass, Eagle Parasail, go out and see Mark, cool guy. He gets to use his fuel on those boats as part of his utility expense. So Suzanne's question all along was, they reimburse their employees. Is it okay if I talk about that, Suzanne?
Go, yes, ma'am, because I'm sure everybody has the same questions.
Yeah. So I'm going to specifically, and Thursday, Nia and I are on another webinar. So if they're allowed to use their transportation diesel fuel for the boats, and Suzanne pays her folks money to get from here to a job in Miami, and that's a big chunk of change over a 12-month period. It's a lot of money. And I think, Suzanne, because you track it so well through the payroll company,
yes.
And it's not something you just added on to get forgiveness, like, oh, let's just add that on, right? Because we can get it forgiven, because we'll have a track record. And maybe we can call your banker now because we know him, right? Yeah. And we can talk to him, or maybe we don't talk to him and we wait for more interpretation on it. But when I saw transportation this morning, when Nia highlighted that for me, I went, oh, I got to tell Suzanne. So whether we're right, wrong, or whatever, Suzanne, I think we're going to stick with that. Transportation's transportation, right? To get your job done, your people need transportation.
Yes, for our employees, if they travel 45 miles, we service Pasco, Pinellas, and Hillsborough. So anytime we have an employee that goes to Orlando or Miami or Ocala, they are reimbursed their mileage. They always have been. They can either claim what we pay, or because of the new tax laws, they can wait until the end of the year and they can claim all of that on their own personal taxes. But because Miami is such a long distance, mileage for one guy down there is a $200 reimbursement. And at any given time, we have had 8 or 9 guys down there.
Right.
And everybody, when COVID-19 broke out, our guys stopped carpooling together because of social distancing. So you have 9 guys at $200 for reimbursement. We incurred a lot more costs because of the COVID-19 pandemic.
Oh, wow. Yeah, some of these things I don't even think about because I'm not there and involved in whatever.
Oh, I have a whole laundry list for you when we're done.
Oh, okay, good. And then Nia, on B above that, business or lease payments. So some folks may lease, we lease our copy machine here, right? Real property, that's personal real property in force, right? Leased vehicles, if we take them on your books, right? That's that, yeah. Okay, keep moving, Nia, thanks.
So I did skip over this part, so I will go back to it. And this is lines 8, 9, and 10 are used to find out what forgiveness amount can be sent to your lender. And so this kind of breaks it down as far as what amount can even be forgiven. And that's a calculation. And it does take you to the schedule, which is further down. And so, you know, there's calculations as far as dates for the payroll, and there's calculations as far as number of employees, and that gets factored in to how much can be forgiven. And I don't know, I found when reading the loan application, you do a lot of jumping around to do the different calculations and find out the different numbers, and there's a lot of different aspects that go into it.
And we're going to lay out all the ingredients. You know, we have PPP folders online already for each client. One of the things from the beginning on the EIDL, 1,000, 2,000, whatever, it was said, oh, it's a grant, it's a grant. From the beginning, they said they were going to subtract it from the PPP. Then they said, no, it's a grant. No, nobody got the 10,000. It's a grant. It's a grant. Now that is being subtracted. If and we helped most people apply. So we have mostly all of your information. Thank gosh. You know, if you have not given us your EIDL, that would have been the 1,000 per employee that we thought was going to be a free grant, spend as you will. That is now being subtracted off the forgiveness part on the, or added to it, or subtract, either way. But we need that loan number if we don't have it. Do you think we have most of those for folks, Nia?
I don't think we have the actual loan number, and that is part of this application. You have to put the application number.
We have the PPP ones.
Yeah. So, because a lot of our clients apply for that loan themselves, so we don't have that number. So if you have that number and haven't given it to us, please give it to us, because it'll make filling out this application a lot easier to gather that information as soon as possible.
Right. And so, Nia, I wanted to just mention that we will be helping to, well, filling out these loans for folks that engage with us to do them. We have found that it was almost impossible to answer questions and provide information to our folks during the PPP loan application process. It was just better for us to do it. We are engaging, we are charging to do these applications. The experts say are between 3.5 to 4.5 hours, depending on the size of the business. But even in a small business, because, and Nia can go over it later, I don't want to justify our fee or whatever. It just, you can do it on your own. We will not be able to provide information. We give you the resources to get that information, but we have so many folks that we have to do these for, that during that time, just know that we'll be working on them. Hopefully, if the bill passes or whatever, they'll be able to extend this 24 months for the forgiveness period.
Yeah, that would be huge.
That would be huge. Okay, thanks, Nia.
Yeah. And another big thing that came out of this forgiveness application was shedding some light on what exactly is covered. Is it what's covered, like what is paid in those 8 weeks? That's what's covered in the forgiveness amount, or is it what's incurred in those 8 weeks? And this application, although it sheds some light, it's still not very specific, but it gives you a little bit of a better idea of what's covered, and it's what's paid as well as what's incurred. So if you get say you got the amount on May 1st and you pay a payroll on May 5th. Well, that payroll was for the 2 weeks prior, so that includes time before the loan 8-week period. But from this, the way I interpret it is that still counts towards forgiveness. And then, you have the loan 8-week period ends the end of July then, and then you pay your employees August 1st. Well, you're paying them August 1st, but that was for work incurred during the 8-week period. So they're saying that is a payroll cost that can go towards forgiveness because it was for payroll costs that were incurred during the covered period, is what they're calling it. And same for the non-payroll costs, paid during the covered period as well as incurred during the covered period. So same kind of thing. If you paid a bill May 5th and then you had another one June 5th, July 5th, that is going to still be covered even though it's outside, the bill is due outside of the covered period. It was for utilities incurred during the covered period.
Good, Nia, thank you. Most of our folks, big, small, or other, have home offices. And again, we don't know. I know the bankers that I talk to, and they don't even know. But I have suggested everybody do a spreadsheet that has a home office and reimburse themselves for whatever size of your office that you're using exclusively for your business, whether it's 12, 15, or 20%. Do an Excel spreadsheet, do a piece of paper or whatever to reimburse yourself, the owner of the company, your utilities, your rent. And so we have proof for rent if you don't rent out a physical commercial space. So we kind of flip-flopped, and there's so many people that, and everybody I haven't heard any definitive information from the folks that I study under they're wishy-washy on it too. We are taking the stand that home offices are allowable, they're deductible, they're more than reasonable, and they're substantial, and so as long as we don't over embellish it and we're doing the right things. Somebody suggested to get a lease between yourself and your company. I guess if we have to, we can do that. We could probably supply a blank form to the shareholders for that purpose at that time. We're not going to do it ahead of time, but do make sure you reimburse yourself for home office expenses right now each month. Go ahead, Nia. Good information.
I think there's only one other thing that I'd highlighted for today to cover because it does pertain to so many of our clients, and that's that the compensation for owners and self-employed individuals can't exceed compensation for an 8-week period of 2019.
So, break that down. In other words, your compensation has to be the same as your 2019. I was talking to Suzanne yesterday, and I'm like, you guys have so much, the shareholders, her husband and his business partner have so much more on their backs. They need to get paid and compensated more. But then Nia brought this up to me. So do not exceed 8 weeks worth of 2019 compensation for any owner, employee, or self-employed. Okay, so the shareholders capped at 15,000. Okay, because that would be equal more than the 100,000 a year. Okay, yeah, they're not we don't have any clients at that point. Okay, Nia, you want to go to some questions? Suzanne said she's got us a bunch.
Yeah, sure. If anyone has any questions.
Or you can bring her on, I don't know.
So the first question, sorry. The first question that I had is that we have been working through this COVID-19 pandemic. We have maintained all of our employees, and we've incurred all these extra hours because all of our job sites now require a COVID-19 protocol every single morning. So the question is that your workman's comp insurance is based on salaries, and if we're having to spend more money and more hours, then why couldn't our COVID-19 hours that we're having to be in these meetings and take temperatures and basically be a nurse through the screening processes, why couldn't those be in the loan forgiveness? To me, company is a case-by-case basis. I don't feel like everybody should be lumped into like one specific, this is how it's going to be done across the board, because everybody's business is so different.
You know, Suzanne, you're always, you know, you're all in on your business. So you're there, you're living it every day. I get it. I did read something today that they did talk about hazard pay. And this is specific to you guys. I'm not sure if we should ask your payroll company to have a separate category. So when it comes down to forgiveness, we go, this is COVID-19 hazard pay. Because I did hear something today as it pertains to forgiveness that there are circumstances just exactly like you're saying that are related directly to COVID-19. Instead of your folks working 8 hours, you know, putting up beautiful moldings in the cathedral, they've got 8 hours plus an hour of COVID check-in and then an hour of COVID checkout. Now that's 2 hours of non-productive time that you had to pay them. So we can talk offline about that, but I maybe ask your, like I said, payroll company to say, okay, X amount is hazard pay or COVID-19 pay. So when those reports come down,
already done. So what we did when COVID-19 broke out, and our job sites had to start going to a COVID-19 protocol, because in our industry, we also have OSIP and CSIP jobs, which are owner controlled insurance. So the job site actually pays for the insurance, and we get we give them a credit for that. So what we did is we created all these COVID-19 codes. So when our employees show up at the job site in the morning, they clock into a COVID-19 code, and then when they actually start their day for installation, they then flip to their job site code. So I have a breakout of all these COVID-19 hours that we have spun our wheels of non-production, and then their actual production time per job site broken down.
Okay. Okay, good. That's beautiful. I knew you would. Wow. And when I heard that today, and you're on the, yeah, you're in it. You're in it big. At each of Suzanne's job sites, depending on the county, Hillsborough County, as she explained to me, and I was just flabbergasted, there's a nurse on site on these large construction sites. It's crazy. Plus, they've had to spend thousands and thousands of dollars themselves on COVID-19 supplies, wipes, alcohol, this and that, thermometers themselves. Suzanne, we want to make sure that the payroll company, if not, has that code, because they're going to be supplying reports.
They actually have those codes. Bonnie and I created them, so her and I can actually run payroll reports or job costing reports to actually see per job site and as a whole how much we have spent on COVID-19 hours versus work hours. We're losing roughly per week about 25 hours of production time due to COVID-19 protocols that we did not brace for originally.
So when they see an uptick in your hours, it's not like you're just trying to, overpay people to get rid of your money so it doesn't go on forgiveness on a loan, but this is our hazard pay. This is COVID-19 hazard pay. Yeah, good. You're on top of it. You're teaching me a lot on that aspect.
In the
What else?
construction industry, it's a whole different animal. It's very, very different because we were considered essential workers. So like you stated earlier, I had a crew down in Miami because of social distancing, and Miami is a huge hotspot for COVID-19. We wanted to keep our employees as safe as we possibly could. So we actually leased a house down there for 3 weeks and made that our home base. So they were not in a hotel or exposed to people who lived in Miami-Dade other than just being on the job site, which was about a $15,000 more of an expense than what was originally in our bid for that project.
We may submit that rent.
Okay,
So you've got that lease. Good to know.
I do.
No, we need that lease, probably.
Okay.
And that's something too that, hopefully will change and as things go on, because in this, it says for things enforced February 15th, before February 15th, 2020. Well, that right there is a great example of costs that were incurred after February 15th, but were necessary in order to continue doing business through this. And so that's something we definitely want to keep monitoring and hope that gets changed, because it needs to be.
So we're hoping, this is going to rely on the banks, right? If the banks have enough of a legal team that knows the ambiguity and what the SBA is going to look at, because they don't want any bad loans, as they say, or any kicked back loans, because then they don't get their pay somehow. I haven't paid too much attention on that, but hopefully they're just not cut dry. That's why through all of this, I have to say one thing. Our relationship, and Larry's known this since birth, right? Since we met, Larry.
Yep.
Relationship with the banker. You've always had a great relationship with your bankers, and it really, really helped through all this. Shane, your banker, like bounced back. We had somebody. We had a real life person. Nia probably did 90 of these loans. Unfortunately, our smaller bankers that we work with, there were 3 that we threw a lot of loans to and helped us through. They cut off at such a point that we went to a lot of the online lenders, and the process was smooth. So we're not thinking that anybody's going to fill out this actual form, Nia. Maybe First Citrus Bank, because they were still doing, they had a portal too, but they actually had the app. But we're not thinking anybody's going to fill out this form per se. It's all going to be kind of online. And so we just hope that there's some ambiguity and real life thinking that, in Suzanne's case. Does anybody else have any thoughts pertaining to their forgiveness that they're totally unsure about, uncertain about, have questions about?
Larry
I have
just said, oh, sorry, go ahead.
So because my income fluctuates, just due to being commission based, I have a average payroll, but then I've taken disbursements, and which is something I was planning on doing in some of this 8-week time period. But I thought I read that like owners of companies were not allowed to do that and be forgiven for it.
So say that again, Christine, because I didn't understand that totally.
So like if I paid myself a regular payroll, but then wanted to take a disbursement, because if I can't increase my payroll, but I wanted to take disbursement like I normally would have, based on a large commission, let's say, can that not be forgiven?
No, disbursements, or as we call them, distributions. Wait, I forget if you're a single member LLC. Is Christine a single member LLC? So yes, it's draws. Yeah, it's draws. So you can still take them, but draws are, wait, so Christine's on payroll though, so she's an S corp. Otherwise, if she was a single member, okay. So those are called distributions, and distributions, because they're not that they were never included in any formula for forgiveness to begin with. You can take one, Christine, take it for, it's only May. We've got a lot of time to make up payroll as far as taxes, but as far as forgiveness, no.
Okay.
No. Yeah. Nia, do you think there isn't any additional monies owners can be paid during COVID, or are we just going to wait to hear more?
Yeah, I mean, I think we're just going to wait to hear more. Fortunately, from this forgiveness application, it makes it seem like you can't increase your salary in order for loan forgiveness. And, back to the before expenses that were there before February 15th. Well, that another thing is home offices that didn't exist before all this happened. And now they have the additional expense of a home office, and whether that can be included in loan forgiveness. Right now it seems like it might not be, but hopefully as things get changed, that's something that can be included. And so that's definitely something we want to keep tracking and hope to include.
Oh, we're taking home office. All my clients have home offices. We're taking them. And I will go to the Supreme Court on that one. And also, now that it says transportation, my clients have always had deductions for mileage. Corey travels a lot. He has transportation is transportation. How is that left up to interpretation? Do you have to have a 18-wheeler over the road, to the fuel for that? Is that transportation? What does transportation mean? Does that mean anybody who bought a new vehicle before then? So I'm hoping that will also include mileage expense, and that we take whatever mileage we took for our clients in 19, that we could divide it by 12 months or divide it by 52 weeks, and then times how many weeks, for forgiveness, the 8 weeks for forgiveness. And maybe that'll help a little bit, Christine. So you can take a distribution, absolutely take one, but no, it's not going to be considered just your actual payroll where there's taxes taken out.
Gotcha. Okay.
And that actually brings us to Larry's question about the payroll related taxes and if they're covered in the forgiveness amount.
So your gross payroll as an employee is forgiven, right? But the portion as the employer where the FICA and Medicare is doubled is not. So the employer payroll taxes are not. Now, when I applied for y'all, or when Nia did, and we did the paperwork to apply for your loan forgiveness, is included in that were state taxes. And we don't have state income tax withholding on employees, as you know, but in the state taxes were considered your SUTA, your state unemployment taxes. So those will be included, but not the payroll costs per se, just the gross payroll. Good question, Larry. And we just need to make sure, Nia, that we formulate folks from 19 to now to where they're maximizing their payroll. I think most people know too. Good question, Larry. No, it doesn't. As employers, same with you, Corey. Same with you, Suzanne. You've got the let's see, I got to get on a call. Okay. Yeah. No, not the employer portion.
Does anyone else have any questions?
We probably didn't say any more than you guys already know, but it's kind of nice to have your own community, right? To lean on each other and know, if nothing else, know that we've got our spreadsheets and the webinars we're participating in.
Yeah, and I know. Go ahead.
No, I'm done, Nia. Thank you.
Okay, well, I was just going to say, I know you and I spoke before the webinar of how we really just want to get the point across of, there is this one application, but it's not a one size fits all. Like everything gets boxed differently. You're all in different industries, different company setups, different number of employees, different expenses, different banks, and that's a huge one. Even though there was only one application for the PPP loan, all the applications across the banks were different. Some of them had online portals, some of them were emailed, and so there's a lot that goes into this application as well because of all of those factors. And yeah, so we're there to figure that all out as well for each individual company and how this pertains to you. And a big factor for that is the employee calculations. And I know Kim and I want to have a webinar to go over that specific topic of the full-time equivalents, and if you have employees that don't return back to work, and all the calculations that go into the employee numbers and the salary amounts.
Mm-hmm. Thank you, Nia. Super. Thanks for studying that and looking at that and setting up the meetings. I just want to, so if you guys haven't, look at, if you know for sure, and I don't know whose business is essential and non-essential. Ours was considered essential. Suzanne's construction. Corey, I don't know if you were considered essential or not. And Larry, I don't know either. But if you were considered non-essential and you had to shut down, do not forget to apply with your county. There are some great, there are some great opportunities to get some grant money. Pinellas County CARES Act, my hair salons, Robert Davidson Fine Art, my retail stores, other folks that had to shut down the restaurants, the bars, the county was gracious and gave them a $5,000 grant. Same with the city of St. Pete, but you had to be non-essential. I mean, yeah, non-essential and shut down. Let us know. We're here. We decided early on to quarantine, even though we didn't have to. So Nia right now, as a matter of fact, is up in Pennsylvania visiting relatives, and we, fortunately and gratefully enough, were able to disperse without any skip of the beat. We overpay for this great cloud service with a jacked up firewall because I'm not a technical person and I'm a fraidy cat with all the personal and financial information I have on everybody. So I knew when push came to shove and I asked my folks, would you feel safer staying at home with your families? And they said, yes. I'm grateful for that. I'm grateful for you guys sticking with us. I can't watch the news, things are going to change. Let's talk about that. Let's do webinars together as a team and go, hey, Corey, how can we help you? And Suzanne, how can we help you? Because things are going to change. We're changing. We're totally remote. Nia has set us up, and a lot of you experience that, the client portal, and you click on here and here, and we're going to touch and feel each other in a different way, and hopefully in a better way, in that we can disperse information collectively, and all my clients can meet each other. I've got the coolest clients, as you guys probably do too, but I've got the coolest, neatest clients, and I don't want to miss out on an opportunity as the world's changing for everybody to know each other, because you don't know what business opportunities are out there and what new and different opportunities are out there. And hopefully we get to that point where we don't have to talk about this crapola anymore, although this was kind of a gift, it really was. But this crapola anymore, and we're talking about creating and visualizing and, new and different tax laws. Thank you guys. Like I said, you provide the lifestyle so I can buy my grand little ones gifts. You're all family to me. And Nia, thank you for applying for all the loans for the clients and moving forward. If you guys email me or Nia anytime on what you'd like to have discussed, then we'll do a webinar on it. Say, hey, I don't want to hear about this anymore. I really want to know about the employee retention credit. I want to know about, I don't know, whatever other tax topic or accounting topic that you can think of. Appreciate you guys and take care. Does anybody have anything to say before we go?
Thank you. Thank you.
Oh, Larry, thank you. Suzanne, thank you. Corey, you're great.
Thank you so much, Kim.
Thank you. And I don't know if I said anything. Corey, do you have any concerns or anything?
Nope. This all looks good. Thank you for
Okay. Yeah. Just know you don't have to, none of you guys have to fill out anything. We're going to send out agreements. Unfortunately, we have to bill for it. It's like 3.5 to 4 hours for it. But our intention is to get 100% of it forgiven. So be well and thanks, guys. Signing
Thank
off.
you.
Thank you.
Uh-huh.
Bye,
Bye-bye.
guys. Thanks for joining.
Bye. Thank you.
This conference will